Since the start of 2022, tech and growth stocks have underperformed due to the ongoing fears about inflation and the possibility of global economy heading towards a recession. E-pharmacy retailer Sastasundar Ventures was no different. The stock has plunged over 50% from its all-time high in November, even though the business remains largely unaffected by the current situation. The longer-term growth outlook is very promising thanks to a solid cash position and strategic partnership with Flipkart. Now in Q4 and for overall FY22, SSVL reported a healthy set of results. Total revenue in the March quarter grew 19% YOY. Thanks to the pandemic-led shift to online purchases, the full-year revenue was up 15% year-on-year. Online pharma retailers, if you know, have been sacrificing gross margins for market share gains. With increase in retail discounts and high competitive intensity, SSVL's gross margins took a major hit in the last few quarters. Gross profit margins deteriorated from 8.8% in FY21 to 6.5% in FY22. The reversal in margins is unlikely as the industry is experiencing consolidation with severe price competition, which will result in lower gross margins for the time being. In November 21, Flipkart Group announced the acquisition of majority stake in Sastasundar Marketplace to expand its presence in the healthcare business. Post the completion of this deal, Flipkart Health had acquired 75.1% stake in SML for 1,061 crores. Sastasundar will continue to hold the remaining 24.9% stake in SML via its own step-down subsidiary. While the operational integration with Flipkart is still underway, the Sastasundar platform has already been renamed to Flipkart Health Plus. The combined entity aims to leverage the strengths of both Flipkart Group with more than 35 crore registered customers and Sastasundar with its extensive back-end and front-end capabilities in pharmacy to deliver end-to-end offerings to consumers in the health tech ecosystem. The deal with Flipkart is truly a remarkable development and has opened new growth avenues for all the stakeholders. The business is at a major inflection point, although the investments currently being made by Sastasundar in conjunction with Flipkart will probably start yielding results from FY24-25 onwards. SSVL follows a multi-channel strategy for inventory procurement and sources products from pharma companies as well as from distributors. It currently operates across 3 regional clusters through its warehouses in Kolkata, Mumbai and Delhi NCR. Post the capital infusion and strategic partnership with Flipkart, the company plans to penetrate deeper and wider into the Indian market by adding new service locations. The management has indicated that Sastasundar will be adding 15 to 20 warehouses to expand its online presence to newer states and markets. Overall, the cost base is expected to swell in 12 to 18 months as the company will be investing aggressively in warehouses, people and technology to build pan-India distribution capabilities. So margins will remain under pressure as a majority of the expenses, rent, salaries, advertising, development costs, etc. will be front-loaded with revenues and profits getting realized in later years. While the stock continues to be under pressure as the macro environment remains rather hostile for unprofitable growth companies, SSVL has all the necessary ingredients, cash, people, capabilities, technology, experience, so on and so forth, to scale its business, and there could be major margin unlocking over the next 3 to 5 years. Post the steep correction, the stock is trading at less than 1x of FY24 estimated sales. The prevailing valuation multiple makes it an interesting investment candidate for gradual accumulation from the medium to long-term perspective. And finally, the risks to consider. Margins in the e-commerce business are already wafer thin and the growing consolidation in the industry could make things worse over the short term. In addition to competition, regulations related to e-pharmacies pose another threat to the growth prospects of the company as well as the sector.